how's this price action over the last 2 days fit into the Wyckoff accumulation breakout? I mean, this is a spring, right? But this is not a test. So we have our spring, wherever this ends up, we don't know. And then likely that will revert into a lower test before continuing up. So at some point, and it could even be here. I mean, this is this like 132 level is technically sufficient for a test. It's a good support. It's a long-term support. So I wouldn't be surprised if our like the area where we find some support is going to be in this zone. But if this is accumulation, then this is just the beginning of a much larger move. Although it's hard to say if GameStop truly follows Wyckoff patterns, because even though there is some sentiment, a lot of GameStop's price action is due to manipulation through, ETFs. So the pattern is followed because Wyckoff kind of tracks how smart money plays their money. But it happens in very short intervals with large, very rapid distribution phases. So if you go back historically and look at GameStop, you see these patterns of like accumulation and distribution, but the distribution's very rapid, right? And we get our spring test run, and then we immediately move back into, like, within a few days, we move back into a multi-month accumulation phase before, breaking out. And a lot of this has to do with at these prices, from an institutional standpoint, GameStop is overvalued, right? Institutions consider GameStop overvalued above 150 without a doubt, probably overvalued above 90, frankly. And so we see these patterns play out because of the manipulation that occurs quarterly, and that prevents the price mostly up until November from falling below. There were some fundamental shifts that occurred here. They shorted harder than they ever had during this period. They shorted harder than they ever had. They moved obligations. They shorted below the delta exposure here in December. They shorted below delta exposure here in January. They relieved some pressure into February, but not much. And then they shorted again, right? Consistently compounding on all three of these, their short position that they now have to clear out, right? Because the ETFs are rebalancing. And so, I mean, potentially even a move back to, 250 wouldn't be out of the cards. Based on the amount they've shorted. I don't think we'll climb as high as the previous runs, but we'll see. I mean, if GameStop releases their marketplace, who the fuck knows? The total return swaps from last year on GameStop that they used to hide the short position could in fact have been due on the 18th, right? That futures expiration date is very important because it's 1 year out from, that run up in February and the end of that January squeeze where the short interest just disappeared, right? And it didn't disappear because they covered it. Can you repeat all of what you just said? It helped the price. How's this? I'll just clip it.